Hello, everybody, and welcome. Well, another crazy week in the market. So let's do our usual thing. We'll take a look back at the past week, kind of see where things are, and then based on that, look to make a trade potentially this week. So the first thing I want you to notice, obviously, we're all aware of this market, crashing over the last month. And then if you were watching last week, the market shot up like crazy for a few days, and then on Friday it took another small dive. But really what I want you to notice is kind of this. If you look, this is a 6-month chart, and you see, look at the size of these candles over the course of, let's say, 3 months before this crash. And this is kind of what it looked like for the last few years. I don't need to go on a big graph, but it's the same exact kind of thing. What I want you to notice is what a candle tells you, in case you weren't aware, is the size of the square, the size of these little squares that you see, basically tells you where things opened and closed on a given day. And you can see these are all small ranges, right? It opened and closed a few dollars above or a few dollars below for months. And then all of a sudden this happened. And you can see how big all these candles are, whoops, compared to these little things. So what does this mean to us as traders? Well, when it comes to trading, we like to do what's called play the probabilities, right? I learned and I teach how to trade based on numbers. Probability-based trading, volatility-based trading, it's all numbers-based. And generally speaking, the numbers for the most part are in our favor most of the time. Meaning when you see the market like this, kind of small ranges day to day to day, that's good for our trades because we usually like to do things between a certain range, or we're going to bet it's going to go up over time or down over time, but we have time to watch it do its thing. When we get these massive moves, this is not the norm. And while some people think this is a great time to trade, I personally do not, because this is way outside the norm of ranges. Essentially, on any given day, you're rolling the dice, right? Most of the time, we're like trying to stay within a range or kind of staying above a certain number. But when you're talking about 5 or 10% moves on a daily basis, that doesn't help us as traders, because essentially, you make a trade here betting it's going to go down, and then it shoots up 10% the next day, your trade's already dead. You're already basically a max loser in one day. Usually does not work like that. So in this kind of market, what we want to do is we want to keep our trades extremely small, make sure we can absorb any losses. We definitely need to be directional, as in we need to pick up or down, because when it's moving this far on a daily basis, staying in a range is out of the question. So we're essentially making a coin toss, a coin flip of a trade on a daily basis, and that's why we want to keep it small. 50-50 trades are not what I like to do. I like to be in the 70-30 kind of range, when I make a trade. I don't like flipping a coin to see if I'm making money on a given day. This is no different than playing roulette and picking black or red. So what can we do? Well, again, we can do what we've been doing, which is very small trades, very directional, usually long verticals, like long call vertical, we're going to bet it's going to go up, long put vertical, bet it's going to go down. In this case, what we're going to do is I'm going to show you this trade. So this is the S&P 500 market. I want to show you the oil market. So here's oil, and you can see just like the market, it completely tanked. But this area right here, this is like I think it's like a 8-year low or something. We're at like 8-year lows for oil, right? Everybody knows oil can't go to zero. Oil's never going to be worthless. So how low can it go? I don't know. But if I have to make let's say a judgment call as far as like risk to reward, is there a better chance it goes up $10 from here or down $10 from here? Me personally, if I have to make a bet, I'm gonna bet this way because there's so much more room for it to go up. Again, oil can't go to zero. It's never gonna be worthless. So we're gonna bet here at these all-time lows, we're gonna make a really small bet that oil is gonna go up. So how do we do that? We go to something called USO, which is the oil ETF. You can see it up here, United States Oil ETF, USO, and you can see it's a supreme low, right? It's just above $4. So when we talk about, let's say, the oil market, when I said what's the chance of going up $10 or down $10, essentially that'd be a 50% move. So in this case, going down to 2 or let's say up to 6, same chances, right? We don't know which way it's going to go. But even if it goes down to 2, how much lower do you really think it can go, right? I mean, again, it's not going to zero. Oil's never going to be worthless. So that's the good thing. This is not going to be like a bankrupt company. Many companies during this time are going to go bankrupt. oil's not going to go bankrupt. There will always be a need for oil and a price. So with USO, what we're going to do is something we haven't done before, which is I'm going to go to a trade chart. And as I've always done before, remember, I always try and trade as close to 45 days as possible. But as I mentioned, in this market with these huge moves, there's no reason to go out this far because 47 days in today's market is an eternity, right? This thing could move up 30% and down 30% in 47 days. So I'm going to cut that in half. I'm going to start here closer to 30. So this is the 26-day weeklies, and tomorrow this will be 25. So what am I going to do? Well, in a stock this small, there's not a whole lot we can do as far as verticals. It doesn't make much sense because if we're risking $100 in a vertical, the stock's only $4.50. So we're going to do something which is, like I said, kind of new to us. It's usually an advanced strategy, but because the stock is so small, I don't mind taking this kind of risk. And if your account can handle it, feel free to do it, paper trade it or whatever, but you'll see the risk and reward and what you're actually on the hook for. So in this case, here's the price as of right now, 447. If we sold the $4 put, what that means is if the stock price is above $4 in 25 days as of tomorrow, we'll keep this credit, which is going to be between 45 and 48 cents. Let's just say 45 cents, 45 bucks. Now, if I look at the 47 days just to compare, the reason I'm not going out this far is look, the $4 put I'm collecting, let's just make it easy, 45 cents. If I go out roughly twice as much time, you would think I'd get roughly twice as much credit. But look, if I look at the $4 put, how much more am I getting? I'm only getting 15 cents more at the most. Okay, why would I want to go an extra double the amount of time, an extra almost 30 days, 20 days, 21 days to only get an extra 20 cents? Wouldn't I rather just go here? So that's what we're going to do. We're going to take the shorter term. We're going to say sell put. Right here it says 45 cents. And if I do confirm and send, what does this mean? Well, I collect $45 at the gate, and again in 25 days, if it stays above $4, I'll keep $45. But what happens if it goes below $4? Well, I'll still keep my 45 cents. My break-even stock price, you see here, says 355. So if I hang on to this to the bitter end and expiration, and it closes below $4, I will get assigned 100 shares of stock, but they will be at $355 a share. So essentially, I'm risking $355 to make $45 in this case. Now we can do things later. There's other techniques called rolling. I'm not going to get into it here. It's way too complicated, but you can look it up. But essentially, here's the trade we're making come Monday. We're going to sell whatever this opens up at, whether it's $5, $4, $4.50. We're going to sell the put just below it. I'm going to tell you, if we're not collecting at least $40 for that put, we're not doing it because it's not worth it with commission costs and all that kind of thing. Not worth it, the effort. But the put just below the stock price, which is right now would be 4. If I'm collecting at least $40 for doing this, I am perfectly happy in 25 days if I have to, buying 100 shares of stock at $355 a share because I still believe over time oil will go up. So I don't mind hanging on to this stock for 8, 9 months. I don't care how long it takes, right? I'm just going to put it in my portfolio. It's only a $355 max investment if I get it. And I'm just going to hang on to this oil until I make my money back or make a profit. So that is our trade for tomorrow morning.